Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I have a very important interview for you all today. And we're seeing what's going on with the markets. We're seeing populist uprising in France over a gas tax. We had the election of President Donald Trump, which was a big shocker to the conventional mainstream news. And then we're seeing the backlash, everything play out since then. And to kind of make some sense of what is going on now, we have Dave Collum of peakprosperity.com on the line with us today. And I look forward to exploring some of these topics with him. Dave, thanks for coming on Crush the Street with me and speaking to us today.
Hey, my pleasure. This will be fun.
Well, let's start off with what's going on with France and the populist uprising, people freaking out over the gas tax. Why are we seeing this? Why are they imposing a gas tax on people, which, again, when these globalists are trying to do what's best for the poor, they implement something that indirectly or directly impacts the poor the most. So what are your thoughts on this?
Well, it's kind of a funny one. I've been writing my tail end off lately. And I almost missed the French thing. At least I missed the start of it. And I showed up and all of a sudden Paris was burning. And I couldn't figure out why. And so I hit social media and I found journalists who were saying, what's happening? We don't understand this. And so it clearly came out of nowhere. That makes it one of the more dangerous social movements, in my opinion, because if there's a tangible cause, then there's a tangible solution in theory. The gas tax is the certainly what's called the proximate cause, but if you sort of dial back through history, you look at the Arab Spring, for example. The proximate trigger of Arab Spring was when one angry Tunisian lit himself on fire on the front steps of some building, and that triggered this incredible sea change throughout the Arab community. I think when a population's ready to get mad, the trigger is irrelevant. And so I think the gas tax could actually be getting too much focus, and it could be that the French population they're just mad, and they may be mad about different things. But someone burns a car, and then someone says, "Oh, I'm so mad, I'd like to burn one too." And next thing you know, you got the streets of Paris burning, which I'm told by a Parisian is not as bad as it looks. Just for the record.
Well, I'm sure that could be said on all things across the board in terms of it's not as bad as it looks. And, maybe that could be said too about what's going on in the U.S. politics. But I'd like to get your thoughts on what's going on here in the U.S. The 2016 election was a big shock to the mainstream. Now, if you were following alternative news sources, you would have known that Donald Trump's true support was actually higher than what most of the mainstream polls were showing. But having said that, where are we here in the U.S. and, why has a guy like Donald Trump been able to be so successful in winning the presidency? And, what are your thoughts on this situation as we sit here now in December of 2018?
Well, I could go for hours on this one. I'm not a wildly enthusiastic Trump supporter, but there's something about him that really captures my imagination. He is a consequence, right? That's a pet phrase for those who are looking at this situation. He's a consequence of the fact that again, people are mad. I fear we're entering an era where globally people are mad, and the bipartisan message of Trump to me is that the people said, you've been handing us lousy candidates for decades. We're going to pick our own this time. And in some sense, that should almost be independent of party. I've said that to Democrats, and they say, that's right. They don't go crazy on me. People who hate Trump underestimate him, I think. I think that's the first thing that happened. So his opponents in the primaries underestimated him. Hillary underestimated him. I had dinner, interestingly enough, with Jonah Goldberg about a week ago, and he and I disagreed a little bit. He thinks Trump has what's called a lizard brain, which descriptively is sort of a primal instinct and nothing else. I think he's got more metagame. I think he's a much more streetwise, savvy guy who plays a lot of games, and I wouldn't turn my back on him. But so that's my view of Trump.
So, if anyone is interested, we had written a report on how Trump economics are impacting the states, and you can visit us at crushthestreet.com/Trump if you'd like some more details on that. But having said that, the potential end of the 35-year bond bull market, obviously interest rates are starting to impact this, but I'd like to get your thoughts on where we are right now, and why do you see this as the potential end, and what does that mean? What does it mean? What does the word end mean in this context?
Well, I've been made a fool a few times making predictions. I try not to even predict the past anymore. An argument can be made that a 38-year bull market has ended. If it has, it's the very, very beginning. And investors make a fundamental mistake on interest rates. That the word on the street is often that low rates are good for stocks. It turns out that dropping rates are good for stocks. So as fixed income yield drops, you can bid up equities more and more because you have less of a competitor, basically. Once rates reach the bottom, you've got no more net gains from dropping rates. And this was written in a great article by Buffett in '99. I'm not a Buffett fan. I think he's a hoser. But the article was brilliant. And he said dropping rates create bull markets and rising rates create bear markets, and the rest is noise. And so if we're at the bottom of a 38-year bull market in stocks and bear market in bonds, we're starting the opposite. And so that's why it would be ominous if that turns out to be true.
So what are your thoughts on the U.S. stocks? It seems like stocks have this bullish bias over the course of many decades and years. If you were to look at the stock market, I mean, you can even look at the statistics that we've seen, how 70% of the gains over the last 100 years or whatever are attributed to dividends. And so there's this essentially corrections with a bullish bias over the course of the history of, the last 100 years or so. So, I mean, what are your thoughts on this? And do you see it as a correction in this never-ending bull market over the course of a longer period of time?
Well, it's not never-ending. I don't know if this one's just a correction, but it will end. The last 10 years, we've witnessed hundreds of percent gains in equities that were riding on the back of 2.2% gain in GDP. That's not sustainable. That's kind of a stupid combination. I've been debating this issue for a very long time. If you take the historical return on equities, if you inflation adjust it, and you throw in dividends and you tax the dividends and you tax capital gains, and then you throw in fees, and there's one that I always add and no one else does, is a demographic change. That is, over the 20th century, the pie grew, but the number of people sharing that pie grew by 0.6% per year. So you kind of have to account for that. But the fully adjusted return on equities over the 20th century, over the last 120 years actually, is around, depending on who estimates it, around 3.5%. And the average investor simply doesn't know that. And they're given these fictional numbers. They're not correcting for everything. I write about that a lot this year. It's not uploaded yet, but I put a huge amount of effort into valuations and returns. I think given that we're at sort of world record breaking profit margins, which regress to the mean, and world record breaking valuations, which regress to and through the mean, and the historical return of 3.5%, we're looking at negative returns overall for quite a while. Starting when, I don't know.
Well, and that's interesting. And I totally see the point of that. And we've covered that a lot here at Crush the Street. But, I'll play devil's advocate to a certain degree, just to really extrapolate this conversation, if we could. The US dollar is something of concern for those who look at the debt and the current liabilities that the US has. So in theory, being in a company, a stock, is possibly a hedge against the underlying currency that we're all concerned about. To that extent, are you concerned about the underlying currency or more so the equities, which are overvalued?
Uh, so I certainly was a believer that a determined central banker could cause inflation. And I was dismissive of the deflationists, and I've been really corrected on that. I'm not convinced they know how to cause inflation if the market forces are demanding deflation. And it gets back to this idea that you can't create more money without creating debt. As a consequence, you just kind of chase your tail. And the market won't accept more debt. And so we could go through a big deflation. I'm not convinced the dollar's going to crash. I'm not a Forex guy, so I don't know. But I do think that there are problems ahead, and I wouldn't want to be invested in risk assets right now.
Understood. So what are your thoughts then on real estate? I know this is kind of what triggered the 2008 financial crisis to a certain degree. Have we offset some of the real estate risk by just the shortage of demand that we have seen because of the disruption that we had during the '08 crisis? There was a lot of building that didn't happen. And maybe that pushed real estate prices higher than they should have this time around, and we're there now. But what are your thoughts on real estate as it pertains to interest rates and peak prosperity?
Well, this is easy math. So you sit down with a realtor and the realtor says, okay, what's your total earnings and how much down payment do you have? And then here's what the tax would be. And they say, you can afford a $300,000 house. And most people end up reaching right to the top and often ask their parents for a loan or whatever. You get the idea. Very few people say, oh, I only want to buy half the house I can afford. If interest rates go up, and now that you can't write off the taxes above 10K, which will hurt the upper end of the market, then you can afford less house. So you can pay less. And so the bidding for the houses has got to go down. So in theory, you ought to buy a house when interest rates are at a maximum and the housing therefore is at a minimum. And then the house will appreciate during the period while interest rates are dropping.
So now you're talking about deferring gratification and not just looking at the payment, but actually buying the house for what it costs and paying it off. And I actually like that quite a bit. Interesting. Real estate's an interesting thing because it's got two sides. It's obviously got the capital appreciation aspect if you can buy appropriately, capture equity on the purchase, but then you can generate revenue if it's in a good area and you've done the numbers correctly. So I'm a big fan of real estate, but it's a very micro economy. Each deal is different. And I encourage people to look at real estate, but be very careful because the general macroeconomics of the scene is dicey as you're explaining to us right now. Any more thoughts on that?
That's an important point. Single family rentals, which is what I think you just described, are a lousy business. The best way to house people and make a lot of money is to put them in a rectangular building and pack them in like Legos. Single family housing, you may get wafer thin profit margins off it, but you won't unless you can get the best possible credit. Then you leverage up and you buy a ton of this, and through leverage you then run these real estate trusts and things like that. So the low rates gave the private equity guys the ability to buy single family houses, rent them out, and their cost of capital was peanuts. Now, rising rates, that business is going to become a non-profit bearing business. What'll happen next? I think the houses are going to flood the market. The private equity guys will say, no more profit left. We got to sell these houses now. And all of a sudden, all those houses that were built and then liquidated in 08, 09 disappeared somewhere. And the private equity guys have them. They're going to flood back on the market.
David, we've seen precious metals tease us before. Since it bottomed in 2015, the end of 2015 there, 2016 had a nice bull run. We hit over $1,300 gold. In 2016, we saw that happen a couple times actually, move up and down with Trump and what have you there. But then it came back down very materially, really washing and rinsing investors, especially those in the mining space. But we're seeing a lot of optimism right now with gold moving higher, breaking through resistance levels on the technical charts. What are your thoughts on precious metals right now? And are you liking what you're seeing?
Well, again, digressing a little bit, I became a gold bug in '99, and it was so unorthodox that I actually told no one for several years. Um, I paid for a while, 2 years of down before it started going up, but then buying in at 290, dropping to 256, and then going up to 1900. That was great. I was a rocket surgeon at that point. It then got clobbered. And I don't know why it got clobbered. You can go anywhere from, look, that's just an overbought market, to covert deals where the Chinese and the Russians wanted to buy gold, and we said, we'll step on it, and you buy our treasuries. Who knows what's going on? I don't know if I believe that or not, but in any event, it regressed down around 1200. It's been flopping around for 5 years now. And I stopped buying in '07, and then I became a buyer again at the end of 15, and then or end of 16, and then I can't. It's getting fuzzy now. Whatever. I became a buyer in the 1200 zone, and then I'm now full. I have no more. I'm about 25% total worth in physical gold. There's no way I'm going higher than that.
Wow. Well, what do you see as downside from here? Do you see that gold going much lower than it is? If we do see some sort of deflationary environment, are you sort of hedged for the upside if we have an upside, and then you're comfortable with it going lower from here if we do see that?
I'm hedged with cash if we have deflation. You mentioned equities as an inflation hedge. It's kind of a shovel versus a bulldozer model. So if we have a mild inflation, equities will hedge it the way if you have a small amount of dirt, a shovel will move it. If we have serious inflation, gold will hedge it just the way if you have a serious pile of dirt, a bulldozer will move it, right? And so they're all hedges are not created equal. Gold is a hedge against the bad stuff. It's not a good short-term hedge. If the dollar loses 10%, gold's not going to gain 10% necessarily. But if the dollar goes to hell in a handbasket, gold will do very well. So, and as to what hedge fund managers might do or what sovereigns might do to drive up the price, I can't fathom. I thought maybe I could figure it out for years, and then I just forget it. I'm just sitting and watching with a smirk at best, right?
David, I'd like to get your thoughts on cryptocurrency, Bitcoin in general. We've seen it collapse since its peak euphoric stage of almost $20,000. Do you see any value in it? And we've been talking a lot about the psychology of bull markets and bear markets, and that was the most epic bull market that I've ever been a part of. And I'm grateful to have been able to sell and warn people about it being too overvalued and too hyped up, because it's hard to anticipate how bad a bear market can get in the midst of a bull market. And I think it's relevant too with what we're seeing in stocks and eventually what we'll see in precious metals. I ultimately think we'll get into some sort of bull market euphoric stage with the precious metals. So, but having said that, what are your general thoughts on cryptocurrency and Bitcoin in particular?
So, quick disclosure, I don't know squat. I watch it. It looks like tulip bulbs to me. I know some very smart guys who are very enthusiastic. I'm also convinced that 99% of the people who babble on about blockchain don't know what they're talking about. I think to really understand blockchain, you got to be a genius. And I'm also confident that of the 2,000 cryptocurrencies out there, there's going to be a 99% fatality rate. The only question I have is, will there be 100% fatality rate? And that I don't know. It won't shock me if all cryptos go away, and the only thing left is the code for blockchain, which has other applications. There could be residual cryptocurrency, but I personally think the Bitcoin is going to go away. Why do I think it's going to go away? Because it flies in the face of the personal interests of every sovereign state and every central bank. And so for Bitcoin to win, they are going to have to avoid being defeated by every powerful force in the world. And hypothetically, you want to trade in Bitcoin and the Fed say it is now against the law for you to trade in Bitcoin. How many people are going to trade in Bitcoin, right? Even if it's untraceable, people are going to say, this is it for me, I'm out. I'm done. And so I think the officials can step on Bitcoin. They can tax it into oblivion. They can legislate it into oblivion. They can destroy. If you're 1099, if every Bitcoin transaction is a line item in your 1099, you have a major problem.
Yeah, it's an interesting point, and point well taken. I guess it's a matter of how much the regulators have their control on these capital markets. And I think the more they lose control of the capital markets, the more something such as Bitcoin will attempt to stand up and sidestep the conventional system. But as long as we have some reasonable financial structure, and everything's functioning the way it should, I could see their actions really coming against something such as cryptocurrencies. But I mean, look at a country like Venezuela, obviously the very small subsector of the entire global economy, but that government has fallen off the rails. And if you're the average person there, you're not going to listen to a government that's trying to lock you into a currency or a banking system that is inflating the purchasing power away. And that's the beautiful thing about something such as Bitcoin, where you can move your wealth into something, fly to the United States or wherever you are around the world, turn on your computer, and your wealth is there. You can transfer out of it immediately if you want it. So, yeah, it's an interesting discussion for sure. David, if people want to learn more about you, I'd like to kind of wrap up this interview here. And of course, thank you for coming on Crush the Street. If people want to learn more about you, what you do, please share some closing thoughts and where they can reach you and what they can expect to find.
Well, so there's two ways that I sort of reach out to the world. Three ways. One is podcasts like this and interviews and things that just pop up randomly. The second is that I write an annual year in review, which for better for worse is unique. I'm in the middle of writing it right now, and it's a monster. It's way bigger than anyone else does. It's uncontrollable. It's my lizard brain going out of control. And I try to put together what happened. And then lastly, I'm on Twitter. And if you really want to reach me, that's direct pipeline. And my Twitter handle is David B. Collum, sort of capital D in David, capital B as in boy, Collum, capital COLLUM. And that will at least make first contact no problem. You can also email me, right? I'm in the chemistry department of Cornell. In your IQ test, you have to be able to find me, right? If you can find me in the chemistry department of Cornell with Google, then you get to email me.
That's great. All right, David, thanks for coming on Crush the Street. Appreciate your time here with us.
No problem.